Welcome to Momentum Monday. Today is May 28th, 2023. Howard, are you enjoying the bull market in tech stocks?
Yeah, it's nice. I mean, I think we did a good job of not being bearish. It's one thing to not catch everything after coming out of what do we got? There's the Q's a monthly. If we go look at a weekly, it was a brutal bear market. I can think we can safely say for the moment we've entered some kind of I think some people have been bullish much earlier than us, but we were cautiously optimistic the last few months. Now I think we've safely entered some kind of bull market for at least tech stocks,
Yeah.
led
Any,
by obviously Microsoft and Nvidia, I would say.
Anything AI related, really, which at some point will impact all businesses, all sectors, but mostly tech so far. We're in early innings. So, I mean, there's still
It'll
talk.
spread though. Like the good thing about getting your mindset right, if this is a new bull market and hey, it was a pretty weak bear market, all in all, which survived the fastest rate hikes. I mean, you think about what this market has digested. And again, I know it's starting out in tech. I would assume it would spread. But again, it's just on price action. I assume if we're in a bull market, it's spread. There's no guarantee. Um, but you know, the odds are that something good. There's just not a lot of good stuff priced in, right? We've got crazy politics, we've got debt ceiling. These are all known knowns right now. We all assume people are going to be terrible politicians. We assume rates are going to stay high. The inflation narrative is still going. Banks are blowing up, but yet the market's going higher. So there's a lot of negativity, and yet why? And now the dollar's actually rallying, which is supposedly not good for stocks.
Yeah.
So what would happen if we got good news? And therefore, I think a lot of bad news is priced it. I think the people that are struggling being bullish are like valuations. Pretty much the only negative out there is valuation. But I just don't know how to tell. They're not as crazy as they were in tech a few years ago. Pretty much every SPAC's trading at 90% off. Anything without a business model is getting hammered. Um, the IPO market's still closed. So that probably is helping the big tech in that there's no new great companies going out, right? So supply has dwindled. These are all reasons that we got a bull run. These are all the reasons we weren't super negative. Now you can see that the trends have kind of resolved to the upside. Is that what you're seeing too, Ivan?
Yeah, I mean, a lot of strong action in tech stocks. And now it's not only about the mega caps, the Microsoft, Nvidia, Amazon, Google, Meta. Now we're seeing spreading it into other tech stocks like Adobe and all of the semiconductor
Adobe
companies.
now has an AI play. Broadcom. You have AMD bouncing. You have Amdocs, which is a huge company. DOX, um,
I mean,
very large
the
company.
AI related strength is just really spreading into more tech names as of right
But it
now.
also makes sense that the big names, they have the apps, they have the traffic. AI is going to make their products a little better, will allow them to run leaner, theoretically. So a lot of this is hype, but a lot of this is hype for a reason because as much as there is hype and a lot of companies won't be able to deliver, a lot of money is flowing into the fact that there will be some delivering
But
on
it's not
product.
only hype because
No, it's not only hype. There's no doubt.
I
It
mean,
works.
companies
People
like
love the prompt is a very fun and cool way to search and to discover. So the internet
companies,
is getting
yeah,
bigger. The internet is getting bigger.
yeah, companies like Google and Meta, they can easily slash 50% of their workforce and not really feel it in terms of productivity. and efficiency with everything that AI tools can afford people to do. So the market is really pricing that in, that people that will remain working will be much more productive and companies will be much more profitable.
Well, the other thing that FANGs are working on, and the big companies this time are much smarter. They're going to the government early and trying to get regulation that will cock block, for use of a dirty word, but to basically put a wall around them to prevent smaller businesses. So it's pretty evil, but it's a new tactic where what they've learned from Web 2 is, with OpenAI, Sam and Mike, they're going to the government early and the government ain't that bright and the government can be bought. And right now the large cap techs are playing the moat game and trying to play friendly with the government early in AI versus fighting them all the way in Web 2. So that benefits the large caps as well. The institutions see that, and there's just all the short-term and longer-term moving averages now. A lot of these tech stocks are moving up, so the dips, the way the quants work, dips will get bought. The programs will be buying the upward sloping moving averages. So the key is to look for this next wave of potential winners.
Yeah,
even Shopify and e-commerce looks potentially like
it is. Amazon has been super strong as well lately. At the beginning of bull markets, it's kind of normal to see strength initially in the mega caps since they're liquid and it's a lot easier to get allocations to them. And if this bull market continues, we'll see that strength spreading into other smaller, faster moving, more volatile names. This is just a normal process. Obviously, it will continue to climb a wall of worry. Interest rates are still high and rising. The 1 month Treasury bill is yielding 6%, which is like a multi-decade high. So the cost of money has risen, which obviously matters to some sectors, usually to all stocks. But basically,
will it really matter if rates start coming down, because that will open up the IPO market, which will increase supply. So it's just, this bull market will not look like the last bull market, at least in the early stages. Well, it does, because the old leaders seem to be working again, but it will look different because we're coming at this from rates that haven't been seen in 20 years, and a much different global walled off economy. So it's going to look different, but a bull market is a bull market, and stocks tend to go up, and more stocks tend to go up. So the idea is to find the next batch of winners, especially when the waters are a little more clear and markets are trending. So, chasing NVIDIA here, I'm not sure about. Like, congrats to the people that got that early. But it is hard to see how that's, valuation aside, it's just,
but it is the go-to play. But yeah, you're right. It's very
there's so much capital chasing so few leaders.
Yeah, there is very little inventory really in AI. That's why money is kind of spreading into stocks that are kind of remotely related, but like you cannot just put 100% of your money in NVIDIA. I mean, why not? But at this point, it's a little bit probably late for that to be that concentrated. So other stocks are starting to benefit. And that's why we saw those move in Adobe and Oracle and all of the other tech names, that all of the like cybersecurity names as well, and some others that are like smaller ones.
Yeah.
But yeah, it's mostly tech. Really, if you look at other sectors, there's
$20 billion companies, Symbiotic, so they do robotic systems.
Yeah, I mean, like, so warehouse management system. They said they use AI for that. So yeah,
was that a SPAC or it went public?
It used to be a SPAC, yeah. I mean, everything that is like $10 like this, it used to be a SPAC.
Yeah, but that's a SPAC that's just
very successful. But they say they're super concentrated. I think 95% of their business is Walmart, so obviously they're very dependent on them.
Yeah, but $20 billion. God bless. So well done. So
Yeah.
there's you know,
So yeah, I mean, it's mostly tech. If you venture outside of tech, it's very few names that are really doing well. This is one of them. Elf Beauty, like cheaper, discounted makeup, doing really well, like
wow.
really a lot better than Ulta, which is probably like the middle class. So your theory about the middle class, brands getting trashed and like
Have to be in the middle.
and
You've
then
got
the
to
high
be,
end and the
yeah,
deep,
you
deep
got to
discount.
cater to these degenerates, or you got to cater to the upper class. You know, the degenerate model's working. DraftKings continues to work, and
Yeah, I
GM
mean,
casinos continue to work. Um, and they're rolling over.
pulling back,
Yeah,
rolling over. Yeah, it's mostly tech right now. This bull market is
mostly
about
tech.
tech.
Yeah,
So
this
this
book
is
is
where,
about AI
yeah,
and
AI and then tech in relation to it
yeah.
so far.
Okay, it'll spread if we're going to go higher. It will. And the key is figuring out these breakouts. Is there any other sectors look good? Housing still strong? I mean, it's really fascinating.
Housing is just consolidating sideways. So obviously their margins improved as lumber prices, commodity prices continue to fall.
Mm-hmm.
So their margins have been improving. The market has been expecting that. That's why they've been making new 52-week highs since January for the most part, many of them. But I would focus on tech. This is where the industry strength is, and obviously, I think with AI, as the market expects companies to become much more profitable, probably it will justify to have higher PE ratio, just because probably companies will need fewer employees to deliver the same quality of service and products. So I think it might be justified to
Yeah, I
have
think it's
higher
one of the
multiple.
one of the other Mobilize worth keeping an eye on. Kind of crashed, but has quickly bounced back near all-time highs.
Which one?
Um,
Oh, mobile.
yeah,
Uh,
Mobileye, MBLY.
MBO. Yeah, I mean, quite a few companies that really got trashed on earnings have
The ones
fully
that have
recovered.
quickly, like I
And
was looking at Cloudflare, and I almost
this
gave
one
up.
as well, Arista Network and Net, like all of them really have completely recovered.
Yeah,
And the same with,
those are huge gaps to recover down.
yeah,
Yeah,
but
the super micro man. Congrats to those people. It's just, and then Marvell broke out.
yeah, definitely. I mean, everyone has been waiting for Nvidia, to kind of pull back, and then they had like the biggest
Yeah, so
30%
now
gap.
everybody's kind of playing sons of Nvidia.
So
So you
they're
got to be
just, yeah,
really
looking for
careful.
alternatives, really.
Yeah, it's fun when it's like this, and so people are taking risks. The people that are still in that negative mindset because they stay positive for too long are just going to get run over.
Yeah,
There's so much capital.
just don't
You
fight the
know,
trend.
I
You
felt
just,
Tesla
yeah,
looked so heavy 3 weeks ago, and then boom.
not
Uh,
anymore. Not
no,
anymore.
and as much
Yeah.
as I'm not a Tesla fan, you're not going to short this stock when you just signed the Ford deal. All the competing EV cars, not great reviews, and Tesla has just such a huge lead. And they're survived. Like in the end, surviving is not dying. And now technically, it's coiled with huge volume on this Ford news, and what looked like a sure thing to go much lower and retest the lows is, you
No, it's
know,
kind of digesting, so I wouldn't be surprised if
digestion.
it bounced from this
Very
15
hard.
months moving
Again,
average.
there's a lot of negative news out there that everybody knows about, and so I'm glad I didn't stay negative. It's very hard for people to switch, because of valuation, the fact that we haven't really, the S&P never really got down to the low threes. People were wanting it to drop another 20%. So as with the IPO market closed and supply pretty contained, the bad companies really went away quickly. The Apple chart, thank goodness it's my largest position, but
But even Warren Buffett
like it is
doesn't,
for most of Americans. It's not
yeah.
like I'm a genius. Most Americans only SPY. So most Americans, it is their largest position.
I mean, that's good news because Apple is
Yeah.
up what, like 175 times three, like 500 times in 20 years,
Yeah.
more than that. So
Yeah.
even Warren Buffett doesn't invest based on valuation anymore. Even he invested in Apple, very high valuation. So you need to adjust to the new reality of the market.
Yeah. It'd be interesting if Buffett comes for semiconductors or AI, if this leads to more tech for him. This correction in financials leads to him taking a little more risk on the curve in tech because
There's still a lot of money on the sidelines, so that is waiting
oh
to get,
yeah,
yeah, put to work.
there's still so much scared money and the hedge funds are short. And I'm in an age where I was going to write about where I used to, 70 to 100% long down to low of 30. I'm probably going to be between 30 and 70% in this new age that I'm at. So,
This is
I'm for
interesting, like companies like Starbucks and
it just,
Nike getting pulling back
yeah.
recently.
Well, they're stuck in the middle, remember, and they're expensive
Yeah.
products for what they are, right? So they're great companies, but they're just so big and kind of overpriced to be selling to the middle. They're not. So it's just hard to keep doing their numbers. Remember, consumers still stretched and interest rates are high. So it's not going to be a bull market like you're used to if we
Yeah.
continue to go
It might
up.
be concentrated into
We
certain
got a
areas.
shrinking, the world is not as open as it was. And consumers looking again, like the key thing to remember is not that it's okay to be bullish, but it's also okay to understand the constraints of this bull market. People are tapped, not the rich, and debt. But the debt is screaming higher. People credit card debt, etc. So it could be a lot of fits and starts. To the people that got on the AI train, that was a tough trade, right? When let's give them credit. The people that could buy these things and down into the crash were rewarded. They took a lot of risk and they were rewarded. I doubt the people that were buying those dips, speculating down 40%, held it fundamentally through this high. But the people that came in the twos on the way up in Nvidia, the guys who saw this coming, hats off. That's you have to have a little bit of you have to have a nice risk reward. You're getting paid nicely. It's not going to be that easy for the rest of these. That's it. So enjoy Bulgaria. Where's next?
I'll go to Greece in a few
Ooh,
weeks. Yeah.
very nice.
So that's about it. And after that, I'm coming back to San Diego.
Our beaches are closed.
Yeah, right.
No, dude, Coronado's closed for the been closed for a while from all the sewage from Tijuana.
Oh, okay. I mostly
Yeah.
play beach volleyball, so that's fine. I don't surf really.
There's been a lot of people with like strange diseases that are playing beach
Oh,
volleyball.
interesting. Interesting.
No, I'm kidding. All right.
Okay.
All
All
right.
right.
Have a
See
safe trip.
you till next week. Okay. Bye.